All right, this is going to be a short video on agency risk, or principal agent risk as it's sometimes called. This is a really important risk that all investors need to know about, and it's one of those risks that in certain instances it's an obvious sort of risk to think about. In other domains it can be kind of invisible to people, and people can really struggle with seeing it in other domains where it's less visible or more abstract. So we're going to go into some examples in this video. But first, let's just define what is agency risk, or what is principal agent risk. It's a mismatch between a principal who is, say, the owner of a company or someone who wants a task done, and the agent that they hire to perform that task, right? So if the most obvious example would be something like a real estate broker. In the world of real estate, you're a principal, meaning you own a house or a piece of property, and you hire a real estate broker to be your agent to facilitate a sale. And you can see where there might be a match of interests. In other words, if the higher the price for the property, the more everybody gets paid, right? You make more, and also the broker makes more because they get 6% commission. However, there might be a mismatch in the sense of how quickly a piece of property can sell. And this is where you can sort of see potential principal agent risk. A broker, for example, may not be necessarily interested in getting the all-time max for a piece of property for you on your behalf, because that might mean that the property might sit on the market for a number of months or even years. And the broker might counsel you to say, well, maybe we should set this price, because the broker may know that it's likely to sell very quickly at that price. Now, they can instruct you, that this is my opinion or this is how I think about it, but they may not, right? And you as a principal need to understand where the interests of this agent, of your broker, may be misaligned with your interests, right? So, perfect example would be trying to get a quick sale for a property rather than trying to extract maximum value from a property. In the old way that people used to buy stocks, right, where you'd call up your broker, or your broker would call you with a new stock idea, is another example of principal agent risk. So the stockbroker is your agent to facilitate the buying and selling of stocks, right? And how does he get paid? He gets paid by commission. And so in the 80s and 90s, you had instances where brokers might churn, meaning do a lot of trading in and out of stocks in order to produce commissions. And of course, your interest is maximizing your capital or not losing your capital. And in this case, it's an obvious mismatch where the broker wants to create commissions, to generate commissions, and you're just paying the broker more and more commissions going in and out of stocks and not necessarily increasing or augmenting your capital. So this is another example of a principal agent risk. Now, as an equity investor, here's the real category to pay attention to. So when shareholders are the owners of a company, right? So Coca-Cola or whatever company, Google, the shareholders own the company, but they actually hire management to run the company, right? So the management is the agent, and the shareholders are the principals. So here's your principal agent, two parties involved. And you can think of instances where their goals might be aligned. So if the management of the company owns a lot of stock as well, or has a lot of stock as a percent of their net worth, then the interests of shareholders and management may be very well aligned. And this is something for you to think about, for you to look at as an investor. Is the management in alignment with shareholders? You can find other instances, though, where there may be a mismatch. Say, for example, you bring in new management, and let's say their compensation is mostly by stock options. They don't own a lot of stock. Well, you can think about, say, what the agenda of an unethical management might be to, in the short run, really maximize the growth of a company at the expense of the long run, because if they can get the stock to pop, their options will pay out and they'll get paid a lot of money, for example. Or another example might be, let's say you have a management with very, very high base salaries, extremely generous compensation, but no incentive structure. And so then they don't have any incentive to grow the company over time. And so these could be examples of mismatches, and you see these periodically with companies. And one theme for investing is an instance where there's enough of turnover in the shareholders to vote in new management when there's a situation where the management is misaligned in terms of incentives with shareholders. So a lot of times you'll see, say, an activist investor get involved in some company in order to get enough shares to basically change up who's running the company and bring in better management or more aligned management. Okay, so these are just different examples of principal agent problem. And I guess I want to just cover one more domain. The domain of healthcare, you can actually see principal agent problems as well. And this is where people can struggle with this idea because, you think, well, your doctor, of course, has your interests at heart. Or if you go into a hospital, of course, the hospital has your interests at heart. Maybe not always, right? And in this particular case, you might have the agent who would be the doctor or the hospital, right? This is who you're hiring, technically, to perform your healthcare services. This doctor might prescribe to you a safe medicine rather than a medicine that may be actually the one that helps you. Or the doctor may want to avoid legal risk, and so maybe he might theoretically order extra tests to limit the risk that maybe you have some disease that he should have found that he didn't find. And of course, no one wants to be that doctor that missed a cancer or missed some obvious diagnosis and then gets a lawsuit as a result, right? Hospitals too. So a lot of times you might find the healthcare industry maybe has a central incentive to manage its legal risk and maybe a secondary incentive to manage care for the patient. And so again, if you're going to be hiring, just like when you invest in a company, essentially you're deciding to hire that company's management to run your capital, right? So you want to look for proper alignment between their interests and yours. You should do the same thing probably with healthcare too. Just make sure this doctor shares your philosophy. He understands how you're thinking about healthcare and will be an agent with similar interests to yours, okay? That's it for today. Thanks for watching.